Hello and welcome to Markets Today. I'm your host, Tudhia Muramugi. It's been a wonderful time for the real estate sector. We saw significant growth in the year and a recovery from the COVID-19 pandemic. 2020 itself, in the midst of all that pandemic, still we reported some significant amount of growth in the sector. The Knight Frank Index says as much. To discuss with us this conversation on the real estate market, I am joined today by Lina Onyango, who is a real estate analyst from Saiton Investments. Karibu sana.
Thank you very much.
Excellent. Well, to start us off, just give us a brief overview of the real estate market as it is, perhaps throughout the year 2021.
For 2021, I'd say there's been much improvement in activities and development if you compare to 2020. We have various sectors. Real estate has various sectors. You have sectors like the retail sector, the residential sector, hospitality, commercial office, etc. So if you check out maybe the various real estate sectors such as the retail, we've had various retailers taking up spaces at a very high rate. We have retailers such as Naivas opening spaces as 2 outlets in a week. We have people embarking in the office to work in the office spaces. At least we have the occupancy rates coming up if you compare it to the 2020 where we had most people working from home. We have the pandemic restrictions have been lowered. We are having hospitality sector improving. We have tourism.
So it's all good news in your industry.
Yeah, it's kind of all good news if you compare it to 2020.
But even 2020, I was looking at the numbers.
Yeah.
Even in 2020, your profitability still went up as an industry.
Yeah, it kind of went up. Okay, I wouldn't really say it went up because it's a business that was also affected with the pandemic. We had certain sectors recording declined returns. It was not all that good news.
Okay.
Yeah, it wasn't all that.
Notwithstanding that,
Yeah.
I could still see a lot of investment in apartments, in housing, especially housing for domestic use. Could you kindly explain the resilience, even in the midst of a pandemic?
Even in the midst of a pandemic, some of the reasons that have supported or driven developers to come up with apartments or others invest despite the pandemic. The very first thing we have is the government initiative to bring up infrastructure, numerous developments, the road sectors, housework. So mostly the road sectors please open up areas for investments, accessibility. They've been making areas boost their prices being boosted, like the land sectors. So even with that, another thing we have is the population growth rate. Kenya's population growth rate is quite high if you compare it to the world's population growth rate. Like Kenya's right now, we are at around 2.3%, where the world is at around 1.1%. So
we are growing faster.
Yeah, we are growing faster, and with that, there's the opportunity to invest to bring up more units, and also we have the low supply for housing units in Kenya.
We'll come back to that low supply thing, okay. But for now what I want to ask is, as Lynette, you've identified that there are several segments in your industry. Yeah. Which segment would you be keen in investing in?
The very first one that I'd say has picked up very well first is the retail sector. Yeah, with the lowered restrictions and all that, several businesses have picked up quite well. People opening up spaces, developments coming up. Yeah, I'd say the retail sector has really picked up well.
But there was a complaint a few years back that we have too much mall spaces in the country. I remember at that time we had just finished or seen the completion of Two Rivers, the hub at Karen, and several other investments. And there was complaint that there's too much mall space.
Yeah.
Even in my hood, I'm seeing that the mall spaces that were there are no longer there. So I'm wondering what's happening and what's causing this high demand for mall spaces.
For the first, to answer your first question, there is an oversupply. Even with our demand analysis, how we do it, there is an oversupply of malls within the country. There's areas where there's even so much of it, but areas where there's an undersupply, like the mountain Kenya, the central region area, there's a lower supply. But if you come to areas such as Nairobi, Kisumu, there's so much oversupply. So yes, there's an oversupply. But what's cushioning this problem, it's the same thing I've been talking about. Retailers are taking up spaces. So
in principle, the retail business is picking up.
It's picking up
several years of.
Yeah, it's picking up, but the oversupply is still a major issue. I can't rule it out. It's still there.
Is the oversupply still there as well in Mombasa? Because I'm seeing some people still proposing mall spaces in Mombasa.
Yeah, it's there. It's there. It's there. Yeah.
Well, fine. So you had mentioned about the demand and supply. Are we looking at increased demand driven by the population or increased demand driven by economic growth?
I'd say actually both, because the first thing, a higher population will necessitate more demand for maybe housing units, working spaces. And another thing, for economic growth, definitely as an investor, you want to invest somewhere that is performing well. So I'd say it's both, not just like maybe I similarly to one sector, but I'd say both, because after all, if I'm an investor, I'd want to invest somewhere that brings me higher returns. So if I notice maybe perhaps Nairobi is doing well economically, I'll want to invest there.
Yeah.
Yeah.
Let me come back to you in terms of, you said retail space is where you would invest as an individual investor. But you're also saying that there's oversupply.
Yeah.
What kind of retail space then would you invest in?
What kind of retail space?
If you are not going for malls, Lynette is not building malls in Kisumu, Nairobi. Yeah, she's not building malls in Mombasa either. But she's keen on the retail space as an investment vehicle for her real estate interest. Where would you put your money?
I'd put my money first in the undersupplied areas. If I want to maybe set up a mall, I'd put my money in somewhere that is undersupplied. That's what I've said. The areas such as the central region, they are undersupplied. But if you come to areas such as Nairobi, it's oversupplied. Yeah. So as an investor or maybe an analyst, I'd advise someone perhaps don't invest in an oversupplied area. Because first of all, your returns will be affected. So I'd prefer someone invest, if you have to develop in the undersupplied areas. Or if you have to invest in Nairobi, maybe take spaces that are available first, so that we do away with the available ones first.
I like that. Undersupplied areas. Yeah. There is a general feeling that if you want to invest in real estate, don't do it around Nairobi. Identify somewhere like your home county. Yeah. And invest there. Tell me about that, if you have any comments. Is this what you're calling the undersupplied areas?
Just to a little extent, but we've had various investors investing outside Nairobi. First of all, the first thing, Nairobi, the prices for various real estate categories are quite high. So you find investors going outside Nairobi, the metropolitan areas of the home areas back. Yeah. Yeah, and another thing, we have the middle income class. The developers have really been tapping on them to take up the units, and then with the affordability, it actually supports their move to go outside Nairobi. First of all, because of the lack of space, such as land, and also the prices, which are quite high, maybe for land or properties, so you find them going outside.
Okay, we will, forgive me, I have come back to this, like this is twice. This retail thing that you mentioned that I should invest in, just describe it for me. Does it mean nifungue duka? Do I open a shop? Does it mean I build a mall? Does it mean I buy mall spaces? Does it mean I develop a mall, perhaps with other friends?
There's the aspect of renting it, and there's also the aspect of buying, and there's the aspect of developing. When I said you develop outside, in the undersupplied areas, if you want to come up with the malls, maybe you develop it in the undersupplied areas if you have to build it.
Yeah.
But if you want to perhaps rent or buy for your business, to come up with your business, for the space for your business, you can rent it maybe even in Nairobi or anywhere, because there are spaces. Yeah.
Let's talk about risk now, in terms of the real estate sector. Yeah. What risk factors are we looking at?
The first thing is the market risk, because it's something that it's a risk that affects like the general market, not just real estate. Because something, let's say like the pandemic, it's something that affected the economy as at large, and real estate as well, which was not left out. So for the risk, I'd start with the market risk, which is there, which I can't rule out. There are also other risks such as there are fraud cases. So maybe if one maybe wants to invest in real estate, you have to know what you're dealing with. First, you have to do a lot of due diligence. There are so many incidences. We have maybe fraud cases in the land sector, or maybe you got involved with a fund, let me say that, a funny company, without knowing, actually really knowing what you're getting into. At the end of the day, this is your money that you're putting here, and it's real estate involves a lot of money. You just don't invest little, like maybe you can wake up, I have 2,000, I can get shares, like real estate involves a lot of money. So you have to know a lot. You have to understand what you're getting into. Because at the end of the day, it's an investment. They're all
I'm really pleasantly surprised that you mentioned about the fund. There was an incident with a fund manager in town where some Kenyans had invested, and some of their money they felt was not well managed, because this fund manager really invests in real estate. I don't know if you have a comment on that, and perhaps a caution.
Such things always happen. They do happen. It's not like it's something that has never happened. So what I'd advise someone, if you've already invested in real estate, or take the initiative to always follow up. That's why I also started with do a due diligence first, so that you know who you are dealing with and what you're getting into. So for that, make sure you be doing a follow-up.
But Lina, I am a typical Nairobian, working 8 to 5, and for some of us it's actually 8 to 8 p.m.
Yeah.
I'm trying to hesitate from saying 6 a.m. to 8 p.m. Really, what time do you have to go around and do all this due diligence and shopping? Isn't there a mechanism for me to know that this is good investment and this is not good investment? For instance, if I were to go into the stock market today, the only risk I'm looking at is possibly the risk of price fluctuations. The risk of fraud is significantly minimized, as long as I am going really to buy a listed stock. Why can't we have something more reassuring in the real estate market?
I'd say from the characteristics of real estate, getting information like that is not really easy, because you cannot know who you are dealing with and all that. Like, let's say I want to invest.
Are you saying all these real estate guys
I'm not saying that they're bad. That's why I told someone, you have to know. Like, let's say I want to invest, maybe I want to develop my land, or maybe I want to buy land or a property. You have to know. Maybe do an online study, or maybe through the check papers, or just physical consultation, so that you know if I use this one, this specific company, maybe I've heard a lot of things about it or what. So you have to also know the background of that company.
Yeah.
And how have they been performing? How do they handle their clients? You have to know a lot of things.
Let's talk regulation. Is regulation really helping in terms of ensuring that the real estate market is safer, that the risks are minimized? Because the fund manager I was talking about is listed and regulated.
Yeah. What I'd say about that one, when you say a product is regulated, it does, and what the other one is not regulated, it doesn't mean that now that the unregulated one is not safe. It can be safe.
But
It can be safe, but it doesn't mean that now the unregulation is bad and the
what I'm trying to really get to is, does regulation help to reduce the real estate risks, especially associated with fraud?
Yeah, I'd kind of say it does.
It does.
Yeah, it does.
I hear you. Fair enough. You know what? I really think that the real estate market is really high risk. Of course, with some good returns here and there.
Yeah.
And so that you find that many people invest in the real estate market with people they know.
Yeah.
And this really leaves out potential and very high yielding opportunities in the market, because we are all going to buy land from our aunts and uncles, and don't want to hear anything about, for example, Saiton or Centum.
Yeah.
Tell me about the Real Estate Investment Trust rights. Let's discuss that. Is it does it mitigate the risks in the industry?
The Real Estate Investment Trust. Oh, okay. How do I put it? I wouldn't really say it mitigates, because it also has its risks, and furthermore, it has not been performing well over the years. So I wouldn't really say it mitigates the risk, because if you look at how they have been performing, they have not been actually performing well.
What do you mean they are not performing well?
If you check, for example, the listed such as the Fahari one, if you check perhaps their price, the inception price they had, and the price that they're trading at right now, it's not really good. There's so much big difference, because one, the information, what I was talking about, information on real estate is not quite easy to get. And also, if you check some of their developments, such as the Greenspan Mall, has not been doing well. We had Tuskys close, and yet they were the anchor tenants. So a lot of issues with it. So they have not been really doing well. But
fair enough, but that is just one incident.
Yeah.
There could be other opportunities that, present a good opportunity for
there are
investor.
others, like, let's say, Econ. Econ has been doing well. The Econ rate has been doing well, both its I rate and its development rate. Yeah, it has been.
So then the risk is not necessarily market-wide. I mean, the non-performance is not market-wide.
It's not necessarily just about the market. We also have risks within the company. The business risks within, maybe their management issues, or maybe you have cases where maybe developers collect a lot of funds from people, and then they inject into other numerous developments, and then they don't maybe perhaps finish the project, although the project stalls. So it's not just about the market risks.
Has the rights of the real estate investment trusts really picked up in the market? Are they getting some good responses? Is there demand for them? Is there really an awareness around them?
I'd say no. That's why I said it has not been doing well, because of lack of information, and then there's no appetite for it is not really that good.
Yeah.
Yeah.
What informs this?
Why I'd say this, why most of them are not doing well. First of all, they're few. They're not that popular in the market. So that's why people don't even know about them.
Yeah.
Yeah. So the awareness is not that much.
Okay.
Yeah.
All right, then. We will take a short break in the discussions around the real estate industry in the country. When we come back, we are going to delve deeper into our expectations for 2022 and what are the segments that we foresee will perform better in the coming year. Stay tuned.